All right, let's talk Ginkgo Bioworks. They just had a pretty wild Q3 earnings call, announcing a huge strategic shift. So today, we're going to break down exactly what's going on, what it means for the company, and of course, for the stock. Let's get right into it.
So, right off the bat, if you just looked at the headlines, you probably saw this number. Cell engineering revenue, their core business, down a whopping 61% year over year. I mean, a number like that, it usually sends investors running for the hills.
But you know how it is, especially with a company as complex as Ginkgo, that headline number is never, ever the whole story. You've really got to dig a little deeper.
And when you do, you find this, a 75% cut in their quarterly cash burn. Now this, right here, is the real story of the quarter. While the revenue number was super noisy, management was making some seriously aggressive moves to get their financial house in order.
Okay, so first things first, let's unpack these financials. You have to understand the noise in this quarter to really appreciate the massive strategic pivot they're setting up for the future.
So here's why that scary 61% drop isn't quite what it seems. See, last year's number included a big $45 million one-off non-cash item from a contract that ended. So if you strip that out, the real apples-to-apples decline was actually just 11%. But honestly, look at the cash. This is what matters. They slashed their burn from $114 million all the way down to just $28 million. And they're sitting on $462 million in cash with zero bank debt. That is what you call a fortress balance sheet.
And listen, this wasn't just them randomly slashing costs. This was some really smart strategic financial management. The perfect example is this renegotiated deal with Google Cloud. They had this $21 million obligation, right? They settled it for $14 million and then totally restructured the whole deal. They cut their future commitment by over $100 million and doubled the partnership from 3 to 6 years. This is exactly the kind of savvy capital management Wall Street loves to see.
Okay, so now that we've cleared up the financials, we can get to the really exciting part. The new Ginkgo story. They're not just pitching a biotech services company anymore. No, they are pitching themselves as the essential picks and shovels provider for the entire AI revolution in biology.
And CEO Jason Kelly, he's not mincing words here. He framed this whole strategy as a matter of national competitiveness. The argument is really simple. The US just can't compete with China on the cost of human lab labor. So, if we're going to win, we have to win with AI and automation, period.
So how are they going to do it? Well, it's this really clever two-pronged approach. First, you have these new AI models that can think, the brains, right? Well, Ginkgo provides the robotic hands in the lab to actually run the experiments. And second, for the AI models that need to learn the very language of biology, Ginkgo provides the massive, high-quality data sets they need for training. They're making themselves indispensable to both sides of the AI and biotech equation. It's a really smart play.
Now, this big focus on AI, it requires a huge shift in their actual business model. They're moving away from being a high-touch, project-based service provider to becoming a much more scalable tools company.
And this just lays out the transformation perfectly. The old model, right? It was all about these deep, scientist-heavy partnerships where you'd hope and pray for some royalties years and years down the road. The new model, it's all about selling the tools today. The robotic lab systems, the software that runs them, the data-trained AI, and all the reagents and consumables that keep the whole engine running. It is a classic razor and blade model, just built for the AI age.
And believe me, they are not being shy about this. On the call, management put a number on it. They said their target for 2030 is for this new tools business to make up 80% of their total revenue. 80%. So this isn't some minor tweak. This is a complete reimagining of what Ginkgo Bioworks even is.
Okay, so we've covered the noisy financials, the aggressive cost-cutting, and this bold new pivot to AI and tools. So, now for our analysis. This is the next call. This is the big question, right? The one every investor is asking. After a quarter like this, with so many moving parts, where is the stock actually headed? What should we be looking for? Here's our take. For Q4, we fully expect them to hit their guidance, but frankly, the stock's not going to move on that. The real thing to watch for, the real catalyst, will be any announcements of new customers for their tools business. Specifically, are they selling their automated lab systems? Now, for the price, expect it to be choppy in the short term, as the market gets its head around this new story. But as they start to prove it out, there's huge potential for a re-rating higher. So, the trade idea? You got to think like a fund here. We're looking at long-dated call options, maybe out to 2026, to play for that one big moment, when a major biopharma company finally signs a massive deal to build out a fully autonomous lab.
That's the event that validates the entire thesis.
So, when you put it all together, the aggressive cost control, that rock-solid balance sheet, and the absolutely massive upside if they pull off this pivot to become the go-to tools provider for AI and biotech, our call is a clear outperform. This is a turnaround story with a very compelling, high-growth second act.
This is not financial advice.